The year is 2025. The United States and Canada, once close allies and trading partners, are locked in a bitter trade war. It began with the imposition of tariffs on goods flowing between the two countries. These tariffs, essentially taxes on imported goods, were meant to protect domestic industries. However, they have ignited a trade war with consequences that reach far beyond the initial intentions. This essay will examine the impact of this prolonged trade war on the United States, exploring its effects on consumers, businesses, and the overall economy. The trade war has created uncertainty and volatility in the markets. Businesses are hesitant to invest and expand, fearing further escalation and unpredictable consequences. Consumers are grappling with rising prices and a shrinking selection of goods. This trade war is a stark reminder of the interconnectedness of the global economy and the potential for significant harm when trade relations break down. One of the most immediate and visible impacts of the trade war is the sharp rise in consumer prices. Tariffs on Canadian imports ranging from automobiles to lumber have driven up the cost of living for ordinary Americans. Take, for instance, the price of a new car. The tariffs on Canadian steel and aluminum, key components in automobile manufacturing, have added thousands of dollars to the sticker price of vehicles assembled in both the US and Canada. The housing market has also been hit hard. Canada is a major supplier of lumber to the US. Tariffs on Canadian lumber have increased construction costs, making it more expensive to build new homes. This has contributed to a rise in housing prices, making homeownership less attainable for many Americans. These are just a few examples of how tariffs are directly impacting the wallets of American consumers, making everyday goods and services more expensive. Beyond the immediate impact on consumer prices, the trade war is casting a shadow over the broader U.S. economy. The uncertainty surrounding trade policy is making businesses hesitant to invest and expand. This reluctance to invest is dampening economic growth. The trade war is also putting American jobs at risk. Industries that rely heavily on trade with Canada, such as manufacturing and agriculture, are facing higher costs and reduced competitiveness due to tariffs and retaliatory measures. For example, the U.S. automotive industry, which has significant supply chains integrated with Canada, is experiencing disruptions and layoffs due to the increased costs of imported parts. Similarly, American farmers who export a significant portion of their produce to Canada are facing retaliatory tariffs, making their products more expensive and less competitive in the Canadian market. This is leading to job losses in the agricultural sector and reduced incomes for farmers. The trade war is causing significant disruptions to the intricate supply chains that have developed between the U.S. and Canada over decades. Businesses that rely on the timely and efficient flow of goods across the border are facing delays, shortages, and increased costs. For example, manufacturers who depend on Canadian suppliers for components are experiencing production slowdowns due to delays at the border caused by increased inspections and paperwork. These disruptions are not limited to manufacturing. The agricultural sector is also facing challenges. Delays in transporting perishable goods across the border are leading to spoilage and losses for farmers on both sides. These disruptions highlight the deep integration of the U.S. and Canadian economies and the fragility of supply chains in the face of trade barriers. Section 5. A chilled relationship, U.S.-Canada relations strained. Beyond the economic fallout, the trade war has significantly strained relations between the U.S. and Canada. These two countries, once close allies and partners, are now locked in a cycle of retaliatory tariffs and increasingly acrimonious rhetoric. This deterioration in relations has implications beyond trade. Canada has traditionally been a close ally of the U.S. on security and defense issues. The trade war has cast a shadow over this cooperation, with some Canadian officials questioning the reliability of the U.S. as a partner. This strained relationship also has implications for regional stability and cooperation on issues such as climate change and border security. Section 6. Inflationary pressures eroding purchasing power. The trade war is contributing to inflationary pressures in the U.S. economy. Tariffs on Canadian imports are increasing the costs of raw materials, intermediate goods, and finished products. These higher costs are being passed on to consumers in the form of higher prices for a wide range of goods and services. This is eroding the purchasing power of American households, as their incomes are not keeping pace with the rising cost of living. The Federal Reserve is facing a difficult balancing act. Raising interest rates to combat inflation could further slow economic growth. However, failing to address inflation could lead to a decline in consumer confidence and a further slowdown in the economy. This inflationary pressure is a direct consequence of the trade war and poses a significant challenge to the U.S. economy. Section 7. Industry-specific impacts from homes to farms. The trade war is having a profound impact on specific industries in the U.S. The housing market, as mentioned earlier, is grappling with higher lumber costs, which are driving up home prices and making homeownership less affordable. The automobile industry is facing higher costs for imported parts and materials, leading to production slowdowns and job losses. The agricultural sector, a major exporter to Canada, is facing retaliatory tariffs that are making American agricultural products less competitive in the Canadian market. This is hurting farmers' incomes and leading to job losses in rural communities. These examples highlight the uneven impact of the trade war, with certain industries bearing a disproportionate share of the burden. Section 8. Political fallout, public opinion, and the ballot box. The economic pain inflicted by the trade war is not being felt equally across the country or across all segments of society. However, the widespread impact on consumer prices, job security, and the overall economy is generating a political backlash. Public opinion polls show declining support for the trade war and growing concern about its impact on the economy. This public discontent is translating into political pressure. Lawmakers from both parties are facing pressure from their constituents to address the negative consequences of the trade war. This political fallout could have significant implications for upcoming elections, as voters hold elected officials accountable for the state of the economy. Section 9. Conclusion. The high cost of trade wars. The ongoing trade war between the U.S. and Canada is a stark reminder of the high cost of protectionist trade policies. While the initial intention of tariffs may have been to protect domestic industries, the unintended consequences have been widespread and damaging. From higher consumer prices and job losses to supply chain disruptions and strained diplomatic relations, the trade war has inflicted significant economic and political pain on both sides of the border. The trade war underscores the interconnectedness of the global economy and the importance of free and fair trade. Resolving this trade war and restoring a strong and mutually beneficial trading relationship between the U.S. and Canada is essential for the economic well-being of both nations. It is time for both sides to come to the negotiating table and find a path towards de-escalation and cooperation.